Hi everyone, welcome to the Principal Connect program. I'm in conversation with Mr. Ravi Gopalakrishnan, Head Equities Principal Mutual Fund. So welcome Ravi to Principal Connect.
Hello.
So Ravi, I'll straight away come to the present dichotomy which is there in the market right now. On the one side, we have a weak economic data which is coming in. We have the weak IIP data which is coming in. The tax collections are below the budgeted levels. We have a lower consumption, and then overall global slowdown. And on the other side, recently we have witnessed that if you look at the last 1 year, uh, the Nifty has given about 11% return. So, what is your assessment of this situation and of this dichotomy which is there?
While you're right that there is a slowdown both globally and domestically in terms of the economic situation. At the same time, markets have been closer to all-time highs. But if you actually notice that only a select few stocks have actually participated.
Correct.
So if you look at it, the top 15% of the stocks would have participated in this entire rally. There is no breadth in this entire rally, and that is the reason why I think a lot of people feel that the participation is not there in terms of wealth creation or whatever, and despite the Nifty being at a high level.
Okay. So yes, I understand. So you're talking about the polarization which is there in the market at this point of time. But given that, so where do you see the opportunities in the market right now?
Right. So if you actually look at the broader markets,
Yeah.
And some of the results that have been announced recently, I think there are pockets of strength where we believe, and this is basically coming in the mid-cap segment,
Okay.
where we are seeing quite a few opportunities there where the numbers are coming in at reasonable tick.
Okay.
While the recovery might still take longer time, but the fact of the matter is that if you really look at the mid-cap space, earlier on it used to kind of trade at a premium of almost 40%.
Premium to the large caps.
To the large caps.
Okay.
Today they are trading at roughly 10% discount.
Okay.
To the large cap. So I think from a valuation perspective, mid caps are available at some sort of a discount, and that's where we see a lot of opportunities. At the same time, if you look at the market capitalization of the large cap index, which is the Nifty index, like I said, that's at an all-time high or closer to an all-time high, whereas the mid-cap index is down 30%. So that's where the real polarization, as you just mentioned, is actually becoming very, very evident.
Okay, so it's basically you're much more bullish in terms of the mid-cap investment right now.
That's correct, because the opportunities are there, valuations are much more reasonable, and growth prospects in India, nobody can question that in any case.
Okay, so with that perspective, we are coming out. Principal is coming out with the Principal Midcap Fund, which is in line with your investment call in terms of more opportunities in midcap. And when we look at the portfolio construction strategy, I think there's a very different perspective which you're talking about in terms of how you'll build up the portfolio, capture those opportunities which are there in the market, and namely you are talking about opportunities in value migration. You're talking about opportunities unlocking value which is there. The third quadrant which you're talking about is in terms of business restructuring and the new age economy. So can you, for all our partners and customers, can you explain all these quadrants in a little more detail?
Sure. I think when we look at the broader economy and the slowdown that you mentioned, a lot of companies within corporate India, are today going through a fair bit of restructuring. If I were to talk about the first quadrant, and the main reason is that especially when there is so much of economic pressure, there's a slowdown. It's a normal tendency for corporates to tighten their belts in terms of reduction in debt, bringing in operational efficiencies, etc., etc. So this is good news because these things do take time, and then if corporates are using this slowdown to kind of strengthen themselves in terms of balance sheet, in terms of their operational efficiencies, I think that's very, very positive.
Correct.
Let me give an example. 5 years ago, if you probably looked at a company, Ashok Leyland, the large CV manufacturer,
Correct.
they had a fair bit of debt on their
Okay.
books. And we were facing that similar, slowdown in 2013-14.
Correct.
And at the same time, they were operating at a suboptimal level of margins of about 10% or so. Return ratios were also quite low. The management actually took upon themselves to kind of restructure the business in terms of repaying debt, bringing in operational efficiencies, so on and so forth. And when they took these steps, the subsequent five years, when the actual cycle actually started to improve, all these ratios and all the numbers that I just spoke about, margins went up,
Correct.
return ratios went up, and obviously, market capitalization also reflected all those kind of things.
True.
So, it is these kind of opportunities that we are looking at in this particular bucket.
Okay.
The second bucket that you spoke about is value migration. In simple words, what value migration means is value addition.
Okay.
For a corporate, basically, you're moving from a low margin product to a high margin product.
Okay.
Right. It could be, engineered with internal innovation, cost efficiencies. It could be a different product line altogether. So combination of all of that. I mean, case in point is a company called Minda Industries that you're perhaps all aware of. This company used to manufacture LED lamps for two-wheelers initially.
Correct.
The margins offered by the OEMs are generally very, very less. And people typically are at very wafer thin margin.
Correct.
And whenever there is a business cycle downturn, typically OEMs get squeezed a lot. So what the kind of Minda decided, was to go the Motherson Sumi way, which is basically have multiple products, have products which get a greater value proposition to the customer, which is the OEM. And have a range of products, which are high margin compared to what they had. So originally, their margins used to be like single digits. But with the introduction of new products, especially alloy wheels, acoustics, blow molding components, etc., the entire margin profile in the last 5 years or so actually improved right from 2014 till 2019, from about 6.5% to about 12.5%. So this is the kind of processes that companies actually follow and make their business model much more robust, so that even if there is some kind of a slowdown, with more components per vehicle, they're able to manage their growth successfully.
Okay.
The third bucket is actually the
Value unlocking.
Stories. Again, you're all well aware that there's a lot of intrinsic value in some other companies.
Correct.
Wherein there could be land, there could be subsidiaries which are going to be listed, etc. So many such companies you could identify over there. These are slightly longer term opportunities, because sometimes it takes longer for corporates to actually unlock value in these kind of cases, right? But the opportunities are there. You just have to look for them and then identify them and sit through them for a longer period. The final, which is much more exciting, is the new age economy. Right. I mean, I could talk about insurance companies. I could talk about mutual funds or asset management companies, wealth management companies. Some of them could not even be listed at this stage, like e-commerce, etc. There could be opportunities coming in the future. There could be movie exhibition. I mean, that's something like a lifestyle change. The demographics of India, which is actually changing. People today are not shy of actually spending money when they go to a theater, and it's just not movie tickets. They spend on food and beverages, etc.
Correct. Yeah.
And today, if you actually see, there are 9,000 screens in India, of which only about 3,500 screens are within multiplexes where you have this experience.
Okay.
So people go to movie theaters to enjoy that experience.
Correct.
So you see, the entire the overall market is likely to grow in the future. So we see opportunities in some of those areas as well, and also in areas such as logistics, for example. It's a highly unorganized market,
Correct.
right? Where you have single truck operators, or 5 truck operators, 10 truck operators. Their job is simply to lift the goods from point A to point B. But if you actually look at some of the organized players within this segment, they are actually investing a lot in technology, whereby they can do things real time. So, for example, today, if you look at a single truck operator, because of the slowdown, a trip from Bombay to Delhi perhaps takes 2 weeks, because once it leaves Bombay, goes to Delhi, empties everything, and then tries to refill everything and bring it back. It takes a long time. But today, with the organized guys, what they're able to do is have a faster turnaround because of the technology, and and plus at the same time, they also provide a lot of value-adding services to the manufacturers like FMCG, auto, so that they are, they don't have to apply their mind in terms of their logistical challenges, warehousing, etc., etc.
True.
So this market is huge again, so we see fair bit of potential in some of these areas as well. So overall, I think the opportunities in all these 4 buckets are pretty solid. It does not mean that we are going to only look at this kind of ecosystem. We are also looking at things outside of that as well.
Correct.
So the opportunities are quite a few. It's just a question of identifying them, and then investing them early, and then sit on them for perhaps a 3 to 5 year kind of investment horizon.
Okay, super, fantastic, Ravi. So I think what I could understand from you is you are at this point of time quite optimistic on the broader market recovery which is there, and particularly, of course, you mentioned about in terms of the valuation that mid caps are at 30%, market cap is 30% discount to what they had at the peak at this point of time, and also they are trading at a discount to the large caps. Okay, if you can just also share in terms of what's about how do you see the earning growth in the mid cap?
Right. So actually, if you see the way it is today, in terms of growth, I think a lot of it will have to do with the economy, the way it pans out. And typically markets give you a signal far in advance.
Correct.
Of either earnings or in terms of the economic turnaround. What I can pick up from the way the markets, situated at this current juncture, it's already showing some advanced signs of recovery, perhaps maybe in the next 2 quarters or 3 quarters down the line. And similarly, I think if there is a broad level macroeconomy, I think mid caps obviously should also participate. It's not that only certain pockets would participate or certain segments of the economy will participate. Yeah, initially it will be certain pockets, but then I think I see a lot of broadening of the market in terms of participation.
Okay.
So coming to a question in terms of earning growth, if you believe that the economy is capable of growing at say 7% plus if you add the inflation and say overall the economy can grow at 11 or 12%, I think corporate earnings will perhaps, especially in these some of the select areas of the economy, can actually grow faster than that.
Correct.
So that's where the confidence actually comes from. This I'm talking from a 3 to 5 year perspective, because
Correct.
Mid-cap investors or any equity investors, as you know, that need for the complete experience, for a proper experience, they need to spend a lot of time. Need to be actually long term.
Correct.
And mid-caps in particular, because the nature is such, typically large caps will participate. We are already seeing that. Mid-caps generally tend to follow. I hope I answered that question.
Sure, Ravi. I think that is very, very helpful. So I think Ravi is clearly at this point of time giving a call on more allocation, incremental more allocation towards mid cap, and that's how this Principal Midcap new fund offer is available at this point of time for investors to invest in. Apart from this, we are also have 2 unique facility which is available for our investors. One is the smart facility for our investors. Investors can invest into this NFO in a staggered manner. So the way it works is when you invest in this NFO, 25% of the investment goes into the Principal Midcap Fund and 75% into Principal Cash Management Fund. And in the next subsequent months, 25% every month get invested into the Principal Midcap Fund from the Principal Cash Management Fund. So that is another facility which you can use for staggered investment even in the NFO. Also, for our investors, we have a auto trigger facility which we have named as My Gain. So in this, investors can choose their target rate of return and can determine what is the target return which they are expecting in the fund to book their profit systematically. And as soon as that target rate of return is achieved, that appreciated amount is shifted to any of the principal fund of your choice, and that's again another facility which you can choose for. So with this, to summarize, Ravi, can you just give us a brief pointers for our distributors and investors of why they should consider investing into mid-cap fund?
Most certainly. I think, broadly, equity markets are at a juncture. Last 2 years, there's been a massive underperformance, generally. And I think, the broad macro, while it is still quite challenging, we expect to see some positives, particularly from the initiatives taken by the government over the next 2 to 3 quarters. So today, the risk reward in terms of, having more allocation towards equity makes a lot of sense. And within equities, I think, because there is so much of divergence between, the way large caps have moved and the way mid caps have moved. And particularly, as I said, there's been a 30% correction. And then,
yes,
in terms of premium and discount, currently they're trading at a discount. It probably makes sense to have some allocation towards mid caps also. So I think, investors should definitely consider, increasing allocation towards equities and to some extent also towards mid caps.
Thank you, Ravi. For more details on the fund, you can visit our website principalindia.com or contact your financial advisor. Thank you.
Thank you very much.
And happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.